Have you ever wondered what really happens to your money after you deposit it in a bank? You check your balance, you see the numbers, and it feels safe. But behind the scenes, your money is working very hard, just not always for you. Banks don't simply store your cash in a vault and wait. They use it, move it, multiply it, and turn it into profit. Today, let us break down a simple but powerful question. How do banks make money from your money? The moment you deposit money into a bank, that money technically becomes the bank's asset. In return, you receive a promise, the promise that you can withdraw it whenever you need. But until that moment, the bank is free to use most of that money to generate income. This is the foundation of the modern banking system. The first and biggest way banks make money is through lending. When you deposit $1,000, the bank does not keep all of it locked away. Due to what's called fractional reserve banking, banks are only required to keep a small percentage of deposits as reserves. The rest can be loaned out. That same $1,000 might be used to issue a personal loan, a car loan, or even contribute toward a mortgage. The bank charges interest on that loan, often much higher than the interest it pays you, if it pays you anything at all. That difference is profit. Think about it this way. You might earn 1% annually on your savings account, but the bank could lend that same money at 6, 8, or even 20% in the case of credit cards. Multiply that spread across millions of customers, and you start to understand why banks are some of the most profitable institutions in the world. Monthly maintenance fees, overdraft fees, ATM fees, wire transfer fees, foreign transaction fees. The list goes on, but they add up quickly. In fact, for some banks, fee income is as important as interest income. Even when interest rates are low, banks can still make billions simply by charging customers for accessing their own money. Banks also make money by investing. Large banks don't just lend to individuals. They invest in government bonds, corporate debt, and other low-risk financial instruments. These investments generate steady returns and are considered relatively safe. Again, much of this investment capital comes from customer deposits, while your money sits in a checking account earning little to nothing. It may be helping fund investments that generate strong returns for the bank. Then there's the credit card business, one of the most profitable areas of banking. They collect interest if balances aren't paid in full. They receive interchange fees from merchants, and they charge late fees and penalty fees. Credit cards are designed to encourage spending, but from a bank's perspective, they are designed to generate consistent revenue. Banks also benefit from something most people overlook: time. The longer your money stays deposited, the more opportunities the bank has to use it. Even if millions of customers withdraw small amounts daily, statistically, most of the money remains in the system. This predictable behavior allows banks to plan, lend, and invest with confidence. Now here's the part most people never think about. Banks are extremely good at managing risk. They don't lend randomly, they use data, credit scores, income history, and algorithms to decide who gets loans and at what rate. This allows them to minimize losses while maximizing returns. When defaults happen, they're often already priced into the system. So what does this mean for you? It doesn't mean banks are evil. Banks provide essential services, safety, convenience, access to credit, and payment systems that make modern life possible. But it does mean you should understand the game you're playing. Your money has value, even when it's sitting still. If the bank is making money from it, you should at least be aware of how and why. Smart individuals learn to flip the script. Instead of only saving, they invest. Instead of paying excessive fees, they choose accounts wisely. Instead of letting money sleep, they put it to work, just like banks do. If you found this breakdown helpful, make sure to like this video, subscribe to NextGen Finance, and turn on notifications. We break down money, banking, and wealth concepts in a simple, practical way so you can make smarter financial decisions in the real world. Thanks for watching, and I'll see you in the next video.